The future of Bitcoin is here and it's hotter than ever. Get ready for a lightning round of crypto news that will blow your mind. First up, could Bitcoin be heading into your retirement fund? We're talking about the possibility of Bitcoin in 401(k) plans, with lawmakers like French Hill and Warren Davidson pushing for it. Will your nest egg get a crypto boost? Then we dive into Metaplanet's massive Bitcoin buying spree as they aim for 30,000 BTC. How are they funding this, and what does it mean for the market? Next, get ready for Portal to Bitcoin's mainnet launch in October 2025, backed by a massive $50 million investment. Is this the next evolution of crypto? And finally, CleanSpark Stock is soaring after announcing a huge expansion of its Bitcoin mining operations and energy portfolio, thanks to a $100 million boost from Coinbase Prime. You don't want to miss this. Hit that like button, subscribe, and ring the bell so you don't miss a single update. Could your 401(k) plan be the next big destination for Bitcoin? U.S. lawmakers, including Chairman French Hill and Representatives Ann Wagner and Warren Davidson, are actively pushing the SEC to allow Bitcoin into 401(k) plans. This move could unlock a tidal wave of capital into the cryptocurrency market, but it also brings significant concerns about volatility and regulatory oversight. Davidson's push for sound money, accessibility through retirement planning, highlights a potential paradigm shift, though questions linger about whether current regulations can keep pace with such innovation. If approved, this could dramatically increase Bitcoin's legitimacy among mainstream investors. However, the inherent volatility of Bitcoin presents a substantial risk to retirees who rely on steady income from their savings. Fidelity Investments faced compliance hurdles when attempting to offer Bitcoin in 401(k) back in 2022, a challenge that remains relevant today, especially with Bitcoin's price surging past $112,000. This potential inclusion could drive significant institutional adoption, but the Department of Labor has voiced strong reservations, citing volatility, fraud risks, and fiduciary duty concerns. Plan sponsors will need to conduct rigorous due diligence and update investment policy statements to accommodate crypto, ensuring participants are fully aware of the risks. Fidelity's past experience serves as a crucial lesson in navigating these complex regulatory waters. On the flip side, 401(k) investors' long-term approach could introduce much-needed stability to Bitcoin, smoothing out its characteristic boom and bust cycles and creating a consistent demand floor through automatic contributions. Even a small allocation from the $12.5 trillion in 401(k) assets could significantly impact Bitcoin's market dynamics and future value. The integration of Bitcoin into 401(k) could revolutionize retirement savings, but overcoming these regulatory and volatility hurdles will be critical. Don't go anywhere, the crypto world is always moving. Next, we're diving into Metaplanet's aggressive Bitcoin acquisition strategy and what it means for businesses worldwide. Metaplanet is going all in on Bitcoin, aiming for a staggering 30,000 BTC. This Japanese company is making bold moves in the digital currency space, recently acquiring an additional 5,419 BTC for approximately $632.53 million, bringing their total holdings to 25,555 BTC, valued at around $2.93 billion. They've funded this aggressive expansion by raising $1.4 billion through a share offering, with a target of 30,000 BTC by 2025 and an impressive 10.3% BTC yield reported from July to September 2025. However, treating Bitcoin as a core business asset comes with significant risks. Price volatility is a major concern, with Bitcoin's fluctuations potentially causing cash flow disruptions and planning difficulties. Security and custody present another challenge. Lost passwords, cyber attacks, and exchange counterparty risks, especially after the FTX collapse, are serious threats. The regulatory and tax landscape for cryptocurrencies remains uncertain, creating a complex environment for businesses needing to track capital gains for every transaction. Furthermore, Bitcoin transactions can be slower and more costly than traditional payments, impacting liquidity and fiat conversion expenses. The speculative nature of Bitcoin also raises questions about its suitability for businesses prioritizing financial stability. To mitigate these risks, businesses can adopt several strategies. Limiting Bitcoin exposure to a small percentage of total assets, perhaps up to 4%, and regularly rebalancing can safeguard financial well-being. Utilizing secure cold wallet storage and reputable custodians, alongside enhanced security measures, can address custody risks. Staying informed about evolving regulations and consulting with tax professionals is crucial for compliance. Employing payment processors that offer instant Bitcoin to fiat conversion can maintain liquidity and reduce transaction costs. Diversifying crypto strategies with other cryptocurrencies or stablecoins can also cushion against price swings. Metaplanet's aggressive strategy could significantly influence Asian and European markets, potentially prompting clearer regulatory guidelines for corporate crypto treasuries. In Japan, their actions might accelerate regulatory clarity, while in Europe, their cross-border approach could foster harmonized frameworks for institutional Bitcoin holdings. As Bitcoin solidifies its position in corporate treasury management, SMEs must navigate this space carefully, balancing innovation with risk management. Metaplanet's strategy offers a compelling case study for businesses looking to integrate Bitcoin responsibly. Stay tuned, because the crypto landscape is constantly evolving. Get ready for a glimpse into the future with Portal to Bitcoin's upcoming mainnet launch and its potential to redefine digital finance. Is a new dawn breaking for Bitcoin? Prepare for a potential seismic shift in the crypto world with the October 2025 mainnet launch of Portal to Bitcoin, backed by a substantial $50 million investment from Paloma Investments. This initiative is poised to dramatically enhance decentralized Bitcoin solutions and could usher in a new era for the cryptocurrency, challenging the dominance of Ethereum's DeFi ecosystem. The substantial capital infusion fuels high expectations for this development, with crypto enthusiasts drawing parallels to the early days of Ethereum. The project aims to bolster Bitcoin's financial framework, positioning it as a key player in the global financial circuit. Michael Saylor's observations on Bitcoin's price stability, with projections of a 29% annual increase, further underscore the potential for significant investor returns. Anticipation surrounding the mainnet launch is already creating market buzz, with Bitcoin holding a market capitalization near $2.32 trillion and over 57% market dominance. Analysts predict a surge in trading volumes as investors seek to capitalize on price fluctuations, especially as institutional adoption grows. This heightened activity underscores the importance of understanding Bitcoin's price dynamics during this transformative period. Beyond trading figures, the launch has significant implications for governance in the crypto domain. As decentralized governance becomes paramount, startups and DAOs face the challenge of balancing innovation with regulatory compliance. The emergence of governance tokens post-launch could revolutionize decision-making processes, making community adoption of these new models crucial for Portal to Bitcoin's success. The convergence of AI and blockchain may also pave the way for next-generation decentralized applications. Regulatory scrutiny remains a critical factor, with the success of Bitcoin-centric solutions potentially hinging on evolving U.S. frameworks. Establishing a compliant operating environment will be vital for institutional confidence. As the 2025 launch approaches, increased engagement with regulatory bodies is expected, offering insights into future investment strategies and fostering market stability. The Portal to Bitcoin mainnet launch represents a pivotal moment, promising to reshape investment methodologies and push the boundaries of decentralized governance. This event could spark a reformation across the industry, offering fresh perspectives on market dynamics. As the community buzzes with excitement, the future of Bitcoin appears dynamic and full of potential. And that's not all the market-moving news today. Get ready for a stock surge as we look at CleanSpark's major expansion plans and a significant boost from Coinbase Prime. CleanSpark stock is on the rise thanks to a massive expansion. CleanSpark Inc. CLSK shares are experiencing a significant boost following the announcement of new financing to scale its Bitcoin mining operations and expand its energy portfolio. This strategic move is attracting considerable investor attention and driving the stock higher in after-hours trading. The company announced an expansion of its capital strategy by increasing its Bitcoin-backed credit facility with Coinbase Prime by an additional $100 million. This substantial capital injection will be allocated towards strategic capital expenditures, including the expansion of CleanSpark's energy portfolio, scaling its mining operations, and investing in high-performance computing capabilities. Matt Schultz, chairman and CEO of CleanSpark, expressed enthusiasm about deepening the relationship with Coinbase Prime. He highlighted the ongoing efforts to add megawatts to their portfolio and explore alternative use cases for their data centers, particularly through the development of high-performance compute campuses near major metropolitan areas. This diversification beyond traditional Bitcoin mining appears to be a key factor driving the positive market reaction. Previously hesitant to expand beyond Bitcoin mining, CleanSpark's pivot towards more diversified compute opportunities is being met with strong investor approval. The CLSK stock saw a notable increase of 5.53% in after-hours trading, reaching $14.50 at the time of reporting. This surge reflects confidence in the company's forward-looking strategy and its ability to leverage its existing infrastructure for broader technological applications. Don't miss our lightning round recap of today's biggest stories. And stick around for our full call to action to stay ahead of the crypto curve. And that's a wrap on today's Bitcoin Bulletin. We saw U.S. lawmakers pushing for Bitcoin in 401(k) plans, Metaplanet's massive Bitcoin acquisition spree, the exciting upcoming launch of Portal to Bitcoin, and CleanSpark stock soaring on expansion news. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto updates, hit that notification bell so you never miss a beat, leave a comment with your thoughts on these stories, and follow us on all social media platforms. We'll see you in the next one.